Step 4, posting. Posting is a procedure we move the information from the journal to the ledger. So here you're given the information. Above this line is one transaction or one journal entry from the journal, the general journal. Below this line is the ledger. In this slide, we're only given two accounts. One is cash, the other is prepaid rent. The reason is the example transaction only affects these two accounts. So posting procedure is very simple. As long as your journal entry is correct, posting is just a routine. Let's take a look at the journal entry in the general journal. On July 1st, the company prepaid rent for $24,000. We debit an asset, $24,000, and then credit cash, another asset. And this transaction is borrowed from here because prepaid rent and the cash were involved. So we just locate cash, prepaid rent in the general ledger. And posting basically is for the prepaid rent, because we debit this account in the journal, so we just put the number on the left of prepaid rentee account in the ledger. And we debit, we just move the number on the left of this T account. Because we credit cash, we put the number on the right side of this T accounts, or the credit side of the T accounts. Also, we have the dates and the page number of the general journal, page 1. We can easily track the information in the journal based on this information. Also, in the general journal for each transaction, we also have post ref. That means we can use this as a reference to find the information in the ledger. 130, it is prepaid rent. And we go to the T account of prepaid rent in the ledger to check whether we did post this information or not, or did we post in the right side, debit or credit. 100 means the T account, cash T account in the ledger. We will go to the ledger to check whether the $24,000 credit was posted appropriately. This is an example of posting procedures. I won't do the posting for all the transactions we analyzed in the prior section. I only explain in the general ledger. These are all T accounts in the general ledger after we post all the external transactions we did in the prior section. For example, the first transaction, we debit cash $60,000 and we credit common stock $60,000. This transaction was just on the first day. We post 60,000 debit cash and 60,000 common stock. Also, we can check by the date and the page number to find the journal entry in the general journal. Another example, accounts receivable on July 9th. On July 9th, the company has sales on account. We debit $3,500 on accounts receivable, at the same time we credit sales revenue. To post the information from this journal entry, here, we debit accounts receivable and the credit sales revenue is on the next page, this one. Both on July 9th, General Journal 1. On July 25, the company credit accounts receivable and the debit cash. And this transaction is from this one. And we debit cash, credit accounts receivable. When we post, we just put 1,500 in the cash accounts, debit side. we credit accounts receivable. So we post 1,500 on the right side of this T account or credit side. All the numbers posted here are from the prior general journal. You may track the information from this ledger to the journal using the information, dates, and the page number of the general journal. Okay, as I mentioned, let me clean up. As I mentioned, the purpose of the ledger is to have the ending balance of each account. Let me use the right ink pen. Yeah, after posting, we can have all the ending balance of each account. You may find cash is the most active account because most transactions or journal entries, cash accounts was involved. That's why you see so many information were posted to cash accounts. There was 11 transactions that cash involved. Yeah, same thing for the next page. Okay, so the organization of the general ledger is the first page shows the T account of balance sheet. The second page shows the T accounts of income statement and dividends. In this page, you only see revenues, expenses, and dividends. They're all temporary accounts. We also have the ending balance of each T account for revenue, expenses, and dividend. After we post all the transaction information from the general journal to the general ledger, we have all the ending balance for each account. Then we can move to step 5. Prepare an unadjusted trial balance. This is the first trial balance. This step is also very simple. Before I show you the unadjusted trial balance, let me introduce what is trial balance. Trial balance is a list of general ledger accounts along with their balance. The trial balance just shows the accounts and its ending balance. These information are borrowed from general ledger. The purpose of this trial balance is to check for completeness and prove that accounting equation is imbalanced. When we prepare journal entry, if we don't make mistakes, the debit always equals to the credit, right? Again, also when we move the information, debit and credit to the general ledger, even the information were posted to different accounts during this process. The total debits should equals to the total credit. Not for each account. For each account, we will have ending balance, either debit or credit. But finally, because these are all from journal entries, without errors or mistakes, the total debit equals to total credit is guaranteed. That's the purpose of trial balance. If this is not the case, we need to go back to check the general ledger and the journal to find any errors or mistakes. Okay, finally, we will have the first trial balance. So the trial balance includes the first column is accounts. They follow the order in the general ledger. These accounts are balance sheet accounts. Followed these 3 income statements accounts. And this dividend is one for the statement of stockholders' equity. That's order. For the balance sheet, you will see these are assets, liabilities, and stockholders' equity. And here we have their balance, either debit or credit. Because these assets, so you will see debit balance. While the rest are liabilities and stockholders' equity, you will see their credit balance. Revenue is credit balance. Expenses have debit balance. Dividend has a debit balance. We'll see the sum of the debits equals to sum of credits. total debit equals total credit does not guarantee the financial statement or prior journal entry and posting are free from error. The cash balance debit 668,500 is just borrowed from here. Accounts payable, accounts receivable 2,000 was borrowed from here. Now we have the trial balance, but it is not ready to prepare financial statement. We will move on to the next step. Step 6, adjustments or adjusting journal entries.